It's 7:30 GMT. Skittish markets remain cautious as European policymakers bicker over how to quell the debt crisis. Ireland unveils its budget and China rate hike talk resurfaces. The official China Securities Journal suggesting this weekend is a sensitive window. The euro looks vulnerable ahead of today's finance minister talks. Investors remain on edge after a 5-hour Eurogroup meeting failed to produce any new steps to quell contagion. The 16 Eurozone ministers said the existing emergency fund was big enough and that the proposal for Eurozone bonds had not even been breached. Euro-dollar hovering around 133.27 after rising a full cent from Monday's low, supported around 132.68. The 61.8% retracement of its September to November rally is proving solid for now. Insiders Nick Edwards will have the latest from Brussels live on the platform throughout the day today. Irish Finance Minister Brian Lenihan expected to get his austerity budget through Parliament later today, averting the risk of a snap election and further contagion in the bloc. The 2011 budget will squeeze €6 billion out of the economy, with social welfare benefits, public pensions and capital projects all set to go. But some economists are warning that such vicious cuts could tip Ireland into a prolonged downturn. Jacob Kierkegaard from the Peterson Institute for International Economics says there's also a worrying hole in the Irish banking sector.
If the worst fears, shall we say, turns out to be vindicated, when the IMF team reports from their stress test of the Irish banks, and therefore we use up all the contingent capital that the international community has put up for Ireland, which will include 10 billion euros or so from the Irish Social Security Trust funds, then I think a lot of uncertainty about the political feasibility of this program will persist.
In the papers, BP has approached a number of UK-focused energy companies about a potential sale of North Sea assets worth about $1 billion. That's according to the Daily Telegraph this morning. A number of papers this morning picking up on the HSBC Bernie Madoff story. The trustee claims the bank continued to act for funds that fed money into Madoff's Ponzi scheme despite repeated warnings, and is suing HSBC for $9 billion. HSBC said yesterday the claims were unfounded and it would defend itself vigorously. And the FT reporting that British pension funds will be prevented from investing in risky assets, including stocks, in an effort to stop fragile companies with large shortfalls from making big bets. Another test for Germany at 10:30 GMT today. After some disappointing auctions in recent weeks, the country will try and sell €5 billion of 2-year bonds. The US Treasury sells $32 billion of 3-year notes later on today. On the data front, German October industrial orders due at 11G will provide further evidence of whether a 2-speed recovery is taking place in the bloc, expected to rise 2%. And in the US, Redbook releases its retail sales index for December, investors looking for a Thanksgiving holiday surge. That's it. Coming up on Insider, ahead of a key day for the single currency, Mitsuo's Nicole Elliott assesses what we can expect from heading into year-end after Eurodollar trips through a trio of technicals. That's at 11:30 GMT. And stay with us for updates, of course, on the hour. I'm Axel Threlfall. This is Reuters.